Welcome to the chaos of trading. News screaming, X hyping stocks to the moon, charts throwing signals like confetti. Your head's like spinning, your account's bleeding, and you're wondering, can I even do this? I've been there. It's brutal, but it is beatable. So stick with me because I've got two distinct ways to filter out the noise and win, straight from some of the traders who've climbed out of this mess. So let's be real. This job is really, really tough, but you can do it. We've seen trader after trader at S&B Capital rise above it, and you're next. I'm Jeff Holden, head of trader development at S&B Capital, and today we're going right at the big problem facing traders. How can there be so many heroes in trading? How can there be absolute stars that seemingly can profit consistently and then even more capture those huge profits when there are big opportunities? But then how can there also be so many traders that struggle, that underperform in the big opportunities, lose the consistency, and then bleed out when the opportunity isn't really present? I think the answer is really simple, and it comes down to one word: noise. Market noise is a beast. It's the moment you're juggling a headline, a fast-moving stock chopping in a range, and a fashionably late in a day two screaming off the lows that you saw develop, and then you FOMO'd your way into, and bam, you're down like $1,000 or $150 or $50. You're chasing a ghost. I've watched traders on our desk like Blink, a newbie last year, lose his entire month of trading profits in a single day because he couldn't stop reacting to every beep and buzz and chart. He started the nasty downward spiral that happens when you start chasing and inventing trades. But it's not just you or him. This game tests your sanity daily. Here's the truth. So the noise doesn't have to win. We've got traders who face this grind, stared it down, and come out stronger. Here's how you can do it too. We've distilled the ability to step outside the noise into two simple steps, and we have two clear trades that can help you sidestep a lot of that noise, both the internal and external stimuli, so you can stay in the zone more often and trade in the zone more often. The first thing is going to be simplify your trading screen. And we'll get into a little nuance here because it really isn't easy. You're cutting out tools and it feels like you're losing edge. But trust me, and for our traders, less is more. On our desk for a while, we had Blink, who's this trader who swore by his 12 indicator setup. He had so much confidence in it. He'd back tested it. In sim trading, he was a hero. But in live trading, and especially as he started to try and grow his account and his risk, he was paralyzed. He was missing moves. Then worse, he'd start to chase after a moment of opportunity had passed him up. So instead of that consistency that he was trying to add indicators to obtain, he was losing like $100 a day, $200 a day, $500 a day. It wasn't his trading psychology. It was what he was looking at while he was trying to place trades. It was him accepting the challenge he had in front of him, the challenge of just being a trader when it was time to trade. So his indicators told him the story of what was happening in the setup and why it was happening. And he would find the right setup based on that indicator group. But when the bright lights were on, when his trading was live, when the real capital was being allocated, those indicators actually created a problem for him. He listened to him too much. He kind of hid behind him. He wanted the indicators to tell him what he already knew in the setup. He knew how stocks moved when the indicators set up on the higher time frame, when he was game planning for those stocks. But live, he was overthinking everything and kind of finding reasons why the good trades weren't worth any risk and why bad trades were worth more risk than they deserved. So he broke his trading down to two different steps. And this is the most important thing. He would break it down into planning trades where he would use his indicators and he would identify the stocks with the right setups based on his indicators. But then he would break into executing trades where he didn't use his indicators. He was planning trades, and when he was keeping his indicators on the chart, and he would plan with them. But once they showed an edge, he would switch to a totally different chart setup. And what he really did was strip down his charts so he could just focus on the price action. He would plan with his indicators, But then during his trading time, he would just pick 2 or 3 indicators like VWAP, the 9-period exponential moving average, or NEMA, as a lot of traders in our desk are calling it, and then volume. And he would ditch the rest while he was actively trading. It was interesting because what this allowed him to do was activate different parts of his brain. It allowed him to explore the deep or slow thinking, that methodical thinking that helped him find the good trading ideas. But then once they were unearthed, he would sit back and relax and allow that fast thinking to take over, the execution-focused thinking he needed to effectively trade his trades. We really find this to be something so many people struggle with. And it's really a balance of internal and external noise. The external noise is the indicators on multiple time frames that sometimes contradict what the time frames are saying first, what those higher time frames are saying, before it all really lines up and those trades really show up for them. And then the internal is the noise that we start telling ourselves when the idea doesn't quite match the trade initially, then becomes more clear later. This is a struggle. It's a process of letting go. But there's a little bit of a freedom that comes with that letting go. When you're ready to execute, that cuts through the noise in real time and allows us to just be there and look for specific clues. So let's take a look at an example of this happening. Now, this was a stock that had a really hard pull in on the day one earnings and then ultimately just kind of chopped around. For a lot of traders, they'll sit there and say, I wish I could trade this. But the reality is, if you just give yourself the opportunity to say, this is not a breakout trade, I'm looking for the day two, you can actually walk into a really good trade. Let's take a look at it right now. As we get into the day two, and day two is a lot of traders really like, but you can look and observe. We get a quick move down into a key support area. And let's watch as the price action changes. You see this attempt to push lower, and then there's a distinct change that starts to occur. This is why a lot of traders love day twos as a starting point, because then we get right to VWAP. We have a great fashionably late trade. We see the continuation setting up there, and we can just stay with it. You can sidestep all that noise on what the opinion is of the stock and how big one move was and how I need to get in, and just allow yourself the opportunity to wait for that day two to develop. Particularly traders on our desk love fashionably lates on day twos. They love offsides trades on day twos. And they love second chance scalps on day twos, especially when it's pulled into a key support area like this. You can see that really clear fashionably late that developed, and then a second chance that develops as well as we break up and then pull back in and then get that continuation move to the upside. These are two things that we look for. And if you're struggling with noise, what you're really doing is simplifying your trade down to 2 setups. And you're getting really good at those 2 setups. And every time you look at something, or you hear something, or you read something, or you think about something, you're just asking yourself the simple question, is this my first setup or my second setup? And if it's not, there's nothing that you can do about it. Don't force it. You look for either your first setup or your second setup. So you can see the difference in the way the higher time frames set up. You have these things set up on a higher time frame. But now let's just look for the A trade here if price matches that higher time frame setup. So plan with that complexity. Do your deep thinking when you plan. But when it comes time to execute, just relax and let the fast thinking take over. It's a challenge. He found it really hard at first. Like the first couple days, he almost quit and he almost reverted back to his other setup. But in a month, just a month, he was seeing things so clearly, especially when it was time to execute his trades. He did all of his deep thinking first and then allowed that fast thinking to take over. At the end of the month, his days would be up $200, $300, $500 a day. Even better, he was seeing the trades clear as day. He was seeing the trades for what they were. They were just opportunities generated by the market for him, for all of us. You don't need a circus on your screen when it comes time to execute. You want to simplify. You want to focus when it's time to execute. It's hard, but it works. We've seen it. And if you do it, you've got this. The second fix is mastering your focus. The markets are inherently noisy. There's news alerts, there's expos, there's chat rooms. It's endless. Shutting them out feels unnatural. Trading's already lonely for a lot of people, and hearing the buzz kind of makes you feel plugged in. But it's a trap. Sert, who's one of our traders, he lived it. What started to happen was he would chase every call out, every hot pick. He thought he was staying sharp by listening to this and then getting involved. But he'd finish the month down $500, frustrated and exhausted. What made it worse was when he looked around, it seemed like everybody else he was following was consistently making money from the same things he was losing money on. He was late, and he was just kind of becoming a bad copy of them. He wasn't trading in a way that showcased his skill, that showcased his playbook. He was just trying to be a copy of what the other people were doing, but he found diminishing returns from it. So how did he fix this problem? He went cold turkey, but in this really interesting way. In order to mute the noise, he focused only on his charts, his trades, his edge, but it didn't stop there. Sert didn't just block out the hype. He actually built a playbook around that hype. So his playbook was simple. He would hear something, but then he would simplify it. And all he would look for was two simple setups that he trusted. He'd allow himself to hear that noise, but what he quit cold turkey was the chasing. So he'd hear the noise, he'd hear a call up, he'd see something happen on a stock. He would hear somebody else trading something. And then he would look for two things. He'd look for a clean range break or a day two trend. No chasing, no guessing. Whenever he heard or saw an idea or a call out, he let his selectivity kick in. He silenced the noise by asking himself a question that is super simple but very powerful. He'd hear a call out and he'd say, is this a range break or a day two? If it wasn't, he'd either wait for it to become a range break or make sure it was a day two, or he just walked away from it entirely. He'd set an alert or he'd write it down and come back to it the next day. Here's another example of what that looked like on day one versus day two. So we have this breaking news and we have this consolidation that's occurring. And our indicators are telling us that this is an opportunity we want to pay attention to, right? Higher time frame, we've done our planning. We recognize that this is an opportunity we want to pay attention to. But we still need to just relax and give ourselves a chance to be a trader. We're going to highlight a little thing that we call the 3-bar reclaim. So you can see how we try and break higher, and it kind of creates this trap because if you're using your indicators on the lower time frame, it's going to suggest this is the moment to get in the trade, right? All your indicators start showing that this is the real entry point. But we fail pretty quickly and pretty aggressively. We come back in, and then we have that slam down below VWAP. And if you're too reliant on your indicators or you're not listening to the price action, that noise can get in your head and make you think, oh, maybe this is reversing. That was a failure, right? What happens next is what you need to tune into because that is not noise. This is actually signal. This is real information. So what you're looking at is a failure, an attempt to break down, and then a 3-bar reclaim, which is one significant red bar gets reclaimed by 3 sequential green bars. What's happening under the hood, what's happening with those buyers is the sellers got really aggressive, and then the buyers are methodically stepping back in with sustained volume. That's creating a trap that if you're too reliant on indicators looks like chop or looks like a change in momentum. But for traders, that's just an indication of more buying to come. So you can enter after you see that bar reclaim, and you can put your stop below the low, and you can look for continuation to the upside. Let's play it forward. You can see how then the real volume starts to come in, and we get this giant spray higher, right? That can be the end of your trade, or you can just keep moving your stop up. You move your stop to the high of the range and then allow it to continue to the upside. And then you're out of your trade when the momentum stalls. Now, This is a fascinating thing that we see so many times, but if you're not looking for it, you're going to miss it. All of this move starts in that little piece of signal versus all of the noise previously. All of it starts with that 3-bar reclaim. You'll see this over and over and over again before moves start. You can let yourself be open to that 3-bar reclaim, and if you look left on your chart, you'll see it so many times. What you'll see is a sequential group of trades that occur, all starting from that little piece of signal within all of the noise. That's the beauty of just being a trader. If you're looking for that little piece of signal in all the noise, and that little piece of signal oftentimes comes from the price action. It occurs when there's one attempt to do something, and then that clear, distinct buy program identified by that 3-bar reclaim starts. So much of it is separating the noise, which can occur in the indicators moving back and forth, from the signal, which oftentimes shows up just in the price action. We love using indicators, but so many traders will use it on the higher time frame. And then when it comes down to the lower time frame, they're executing just with volume, the 9 EMA, and VWAP. At first, it was really hard. The ideas still flew at him. The temptation to I need to be in this, kept popping up. But he stuck to his playbook. He wasn't reacting anymore. He was trading with intention. If you fast forward a few months, Cert kind of flipped the script on all of it. He was up $600, $1,000, $5,000 in a quarter. The truth is, success isn't about doing more. Oftentimes, it's about doing less. Killing the noise, trusting your setups, and playing your game. Trading is this war with noise and yourself. It's not easy. Simplifying your screen, ignoring the hype, building a playbook. It's hard work. But at SMB, we've watched traders like Blink and Cert fight through it and rise to new levels. Blink went from broke to thriving. You can too. Just filter out the noise, own your trades, and watch what happens. What's the loudest noise in your trading? Drop it in the comments. Let's kill it together. And like this, if you're looking for a better place to trade, you are not alone and we've got your back.